On Friday, the U.S. dollar fell sharply after Federal Chair Powell's speech at Jackson Hole. Then yesterday, we saw a rebound to the upside in the U.S. dollar. U.S. rates moved a little higher, but it's just and some technical levels were broken. Today, we're seeing more up and down price action, but the dollar is back lower again, retracing some of the gains from yesterday. So the ups and downs continue in the U.S. dollar and trading here today. And what helps traders find different risks and bias levels in such a market is by looking at the technicals, and that's what I'm going to do in this video. So let's get started. Let's look at the euro on the hourly chart, and in trading, as mentioned on Friday, the euro went to the upside. That was $1 lower. Then we went to the downside. That was $1 higher. And now today we're seeing this up and down price action. Between all that these moving averages. These moving averages represent the 100 and 200 hour moving average of the last 100 and 200 bars, and so it kind of smooths out the price action. But as you can see, they're going sideways, and they're in the middle of this range that we saw since Friday, basically, and that is indicative of a market that doesn't know which way it wants to go, indicative by the ups and downs. Nevertheless, they become a barometer for traders, and as you can see, when the market moved higher early in the Asian session, the price moved up toward that 200-hour moving average. We moved through the 100-hour moving average, and then we found willing sellers against the 100-hour moving average. The price moved back down, test the low price from earlier in the day. Admittedly, the low price did move below the 50% retracement level of the range since July 1. It goes back there to the low price that we saw on August 1st. Just believe me on that. And the 50% retracement was broken not once but twice in trading here today. But what we did see is that the momentum on the downside faded quickly, and we started to use that 50% retracement as a support right here. That led to the move back higher to where the 100-hour moving average held, and then we fell back down, and we went back and tested the low, and then we moved back higher. Now we're into the present. And we just moved above the 100-hour moving average, testing the 200-hour moving average. I get rid of all my other hours right here. And you can see how the price is trying to find some willing sellers against that 200-hour moving average right now, 61.8% retracement. So this is going to be the barometer for traders. This is the risk defining level. This is bias defining level for the euro versus US dollar. Move above it, it's more bullish. Stay below it, and it's more bearish. Move below the 100-hour moving average, gives the sellers more confidence. And then we still need to get below the 50% and stay below that level. Even though we've done it twice, yesterday and today, we still need to do it to show that the sellers mean more business. Absent that, and it's a failed break, and we rotate back to the upside. So, hence, this is a key level. We'll see if how it plays out in trading here today. Get above it, it's more bullish. Stay below it, it's more bearish. Let's take a look at the dollar versus yen next, and like the euro versus US dollar, we saw a sharp decline on Friday. Came down to this support swing area right through here. Found support buyers against that. Yesterday's trader came up to the 200-hour moving average, broke above the 200, broke above the 100, close above the both those levels, but moving back up toward the 38.2% retracement. That's how this moved down from this level right here to that rate level right there. So we did find willing sellers near that level, near the swing area here. Rotated back to the downside in the Asian session, back below the two moving averages. Saw momentum on the break there. The bias changed from being more bullish above them to more bearish below it. And then what do we see? We saw a snapback rally that took the price back above it. We tried to hold above the 100 here, and more recently we've moved back below those both the 100 and 200-hour moving average, similar to what we saw in the in the euro, except for the euro, we are finding resistance against the 200-hour moving average. In this case, we're moving below it, so there's a little bit more of a bearish bias here already for the dollar versus yen. If we're able to stay below these moving averages now, that keeps the bias more to the downside. So be aware of that. That's going to be the key for you as a trader here today. This is a bias defining area now, and the bias just shifted more to the downside below the 100 and 200-hour moving averages. So be aware of that dynamic. Finally, let's take a look at the sterling versus US dollar, and similar to all the other pairs, higher on Friday, lower dollar, lower yesterday, higher dollar. Break below the 200 and 100-hour moving averages yesterday, but we do find support buyers in trading here today against another key moving average in play for this currency pair. That's the rising 100-day moving average. Buyers leaned against that level. Why? Because it's a risk-defining level. It's a bias-defining level, more for the longer short-term dynamics. But we did find support buyers against that level, pushing the price back up. And similar to what we saw in the euro, we broke above the 100, but we're below the 200. And this area is going to be our risk-defining, bias-defining level. So move above the 200-hour moving average, more bullish. Stay below that 200-hour moving average, and move back below the 100-hour moving average. And we start to look back down toward the 100-day moving average, as this cluster of moving averages is really the risk-defining, the bias-defining area for the pound versus US dollar, not only in trading today, but in trading going forward. So pay attention to it. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.